Hey everyone, it is Jay Soloff from Investors Alley, and we are looking at our options trade of the week. So today we're in here in Market Chameleon looking at their unusual options volume table here, and this one we have sorted by calls or call percentage. So the top ones here are 100% calls, 0% puts, and so forth. We could also sort this by puts or volume or whatever we wanted to do, but we're looking at trades that had a lot of calls trade, or majority of the trades are calls. Tends to be bullish, although it could be selling calls, of course, but typically, when we're seeing a bunch of calls trade, it tends to be bullish, but we can delve into it and see what the actual trades are. So there's a lot of, maybe companies that are smaller companies that don't trade a lot here, some leverage ETFs. Moving down, you start to get to some more familiar names. And here's one, Invesco, that you've probably heard of, although it doesn't necessarily trade a lot of options. Invesco is a company, asset management company. They do mutual funds, they do ETFs. You've probably traded the QQQ ETF if you trade ETFs regularly. That's an Invesco product. That's probably their biggest, it's definitely their biggest ETF. And, quite possibly their biggest product in general. They also do a bunch of fixed income and commodity ETFs. So you can see, though, traded about 4,000 options today, which is about twice as much as normal. So if we want to see what that is, more details, see what the details might be on some of these trades, we can click on it. And then we can go to key trades here. This is the options chain. If we want to go to the key trades, and we can see that sure enough, here we see a lot of calls. All the bigger trades, and we're not talking about huge trades, but we're still talking about, this is close to 500 lot, 250 lot. These are all in April of next year, so that's kind of interesting. So let's click on one of these and take a look. I usually like to look at the biggest trades, so let's look at the 477, so almost 500 lot here. And let's look at the details. And you can see that this is the 20 call. The stock is at 17. And there's not a lot of open interest, so this is a new trade, and it's a purchase. I'm buying on the ask here for 45 cents. So pretty interesting. We have a stock that doesn't necessarily trade a lot of options. We have a $17 stock and a $20 call, and they're willing to pay 45 cents, which is not a lot, but if you think about, a $3, that's almost a 20% out of the money call. We do have time. There is the only reason that this is, worth almost 50 cents is because it's an April expiration. So you are paying up a little bit for time, but this is, being a purchase at the 20 strike. This is clearly, it's not clearly, it's almost certainly a bullish trade. Someone's, spending some decent money, for a small stock in 21,000 just for this alone, to take a bet that this stock is going to go above 20. Well, 2045 would be the break-even point by then. But then if you look at some of these other trades, this one's an 18 call, also in April. They paid 95 cents. This one could be a sell. So this could be what could be happening, is this could be a roll-up. There's a bunch of open interest here, so someone's probably closing some 18 calls. Maybe they want to increase their volume and move up to a higher strike, and maybe they've made the money that they wanted to on this particular trade, and they're rolling it up. So there's a bunch of little trades here. So this was probably just one chunk of selling the 18 rolled up to the 20. This could be a hedge. Maybe this person or fund or trader is short IVZ and they're buying calls as a hedge. So there's a lot of different things here. It certainly looks like this is, some of these 18 calls are being sold and then being purchased again at the 20 strike. So probably a roll up. Could be other thing, could be some call spread. So that's the interesting thing, is about, it's kind of a puzzle, and you look at these trades and you try to piece together what it may be. So I would have to say, if I had to, gun to my head, I would probably say this is bullish action, just because it's all calls, and typically you'd have some put purchases in there for really aggressive bullish or bearish action. So by default, I have to say that this is bullish action, and just an interesting thing to look at if you want to take a shot on a cheap stock and buy some cheap calls that are out of the money. This could be one way of doing so. If you're interested in learning more about some of these strategies and things you could do with options that are different strategies, different ways of using options, you could check out the link on this page for my options trading mastery courses. It's about 5 hours worth of courses, 11 different units about different ways to trade options. So I recommend checking that out if you want to learn more about trading options.